So in this video, I'm going to be going over why right now might be one of the best buying opportunities in the markets, not just the stock market, but crypto as well. So when it comes to analyzing charts, I personally love looking out for bearish and bullish divergences. For this video, we're only going to be focusing on the regular bullish divergence. Anytime the momentum indicator is going up and the price is making lower lows, that is considered bullish. And this is how the market shakes out a lot of the weaker hands. Anytime the price is slowly trending down, a lot of people see that as the price bleeding or that asset bleeding. But when you look at the momentum indicators, you could see something like the RSI gaining strength. Right now, we're looking at the S&P 500 chart from 2002 to 2003. The price over here pretty much made a low, went back up, created a low again. During this time, I'm pretty sure there was a lot of people who were in pain. Maybe they sold. But on the RSI, we see a higher high. Now this is on the weekly time frame. The higher the time frame, the stronger the indicator. Yes, the price ended up going up, rolled over, but it still made a higher high. From there, the market just trended higher and made a new all-time high. After the S&P 500 made a new all-time high in 2007, the 2008 financial crisis happened right after. So you can see that the price made a low. At this point, people were probably panicking. They probably sold, rolled over, and made a lower low. During these times, people sell into fear. But when you look at such a simple indicator like the RSI and you see a bullish divergence forming, these are excellent times to be loading up. Soon after that, you can see that the S&P 500 just pretty much rallied for the next decade. Fast forward today, back in June of 2022, the S&P 500 made a low, and then it rolled over, then made a lower low. But during this time, the RSI tells us that the S&P 500 is creating or forming a bullish divergence. Now, the only time this would be invalid is if, the S&P 500 makes a lower low, capitulates, the RSI follows down, breaks this low, then the bullish divergence will no longer be relevant. But even, the price could do something like this where it rallies up and makes a lower low, but the RSI does something like this. That would be probably one of the better buying opportunities. Right now, it's still a good buying opportunity. Is it a perfect buying opportunity? Not necessarily, right? But it's still a good one. So the reason why I'm sharing that is because Bitcoin and the stock market is in some levels correlated. If the S&P 500 or the traditional indices do well, then Bitcoin does well. If it doesn't do well, then Bitcoin doesn't do well. And we know that Bitcoin pretty much controls the entire crypto market. In other words, if the health of Bitcoin is good, then a lot of the altcoins do well. If Bitcoin isn't doing well, a lot of the altcoins bleed harder. Once in a while, there are some alts that kind of take off on their own, but the majority kind of follow Bitcoin. Right now, Bitcoin is creating a lower low on the price for a candle body close, but a higher high on the RSI. So this is a bullish divergence, and this is on the weekly time frame. Again, higher the time frame, the more valid. Now, I do personally wish that the price was a little bit deeper, like in terms of the correction. I wish the price went down here. Maybe we got a candle close over here. That would make everything a lot more clear. Technically, yes, this is a lower low, but you could still redraw it like a horizontal, which is slightly concerning. At the same time, a horizontal price action with a higher high on the RSI is still considered a bullish divergence. My only concern is this possible descending horizontal triangle. The price of that would be from the top to the bottom to the breakdown point, which is approximately around 14.3K, which I have talked about this price level before. This is probably going to be one of the more bearish price targets. But if, Bitcoin does go down, we get a candle body close and the RSI does something like this, that's a great buying opportunity. Here's a great example for Bitcoin in 2015. Bitcoin price pretty much went sideways in terms of the lows, but the RSI continued to make a higher high. And that is again considered a bullish divergence, which led to a massive rally for Bitcoin. So could something like this where the RSI slowly trends higher and Bitcoin does something like this happen? Yeah, maybe a triple bottom. That would be extremely bullish. Now, I've shared this chart several times on my channel. It's a chart that I made dividing up the price momentum into 450 days. And again, I do think that we have already bottomed out, and that's because we've entered this yellow zone. Anytime we enter these yellow zones, Bitcoin tends to either trade sideways or have a relief rally. We experienced that back in 2015, back in 2019, and possibly in 2022 going into 2023, which means I do think that it's very possible that Bitcoin could rally back all the way up to the 40K range within 2023. Now, this is not a price prediction video, nor am I a financial advisor or anything that I share in this entire video financial advice, but based on historical data, if this model, this chart does play out, then within 2023 we should rally back up to 40K, and we should not see any new sort of all-time high until 2024. I've been loading up aggressively down at these levels so that when Bitcoin does go back up to the 40K range, I would have doubled my money. I can take out my initial investment and I could continue trading with the profits that I made. It is possible that things could be different and the market could go lower, and it's very possible. But right now, when I kind of see the sentiment of the market and market participants, everyone has kind of lost interest. Not a lot of people are investing as much as they used to. Right now, economic times are very difficult. People aren't investing as much. A lot of people have lost interest in crypto. Meanwhile, during those times, during the very, very quiet times, that are when big players, banks, and institutions are slowly trickling in and accumulating their positions. Once they have, they'll go public. Everyone's going to FOMO back in, and that's when we're going to see another bull run. Right now, we're on the Bitcoin rich list. The top 3 addresses are pretty much exchange wallets. We have Binance and Bitfinex, but we also have someone called Whale number 4. And I think this is a great lesson or strategy to be learned, right? You dollar cost average when things are fearful, and when things rally up just a little bit, take some profit. When things get fearful again, dollar cost average, and when things get well, guess what? You take profit. This is Trueflation.com. This is one of my favorite websites to check occasionally, actually. This is where we see real world use of Chainlink. It gathers real-time data, financial economics. We have housing, transportation, utilities, health, all of this stuff. Back in March 22, that's pretty much when the entire market started to sell off, because that's when the government or the Fed said that they'll stop printing money. But once they started quantitative tightening or, selling their assets, inflation, started to cool down over time, and it's continuing to trend downwards. So if inflation is going down, the S&P 500 seems to be having a potential reversal along with Bitcoin. It's creating like the perfect storm to possibly, build your position. And maybe this area right now, as you're watching this video, might be one of the better times to be accumulating. And of course, we cannot forget about the DXY or the dollar index. I mean, look at the DXY. It's pretty much been on a parabolic run. Nothing like a blow off top, but, just looking at the price and divergence alone, you see a higher high on the price and a lower low on the RSI. So the dollar index is having a bearish divergence. If the dollar goes down, assets like the crypto market and the S&P 500 go up. Now, if you zoom out and measure the price from March of 2015 to the current price of the DXY, you connect all the dots. Guess what you get when you connect the dots on the RSI? You actually get a bearish divergence, and it's a massive bearish divergence. The only time this would be invalid is if the DXY continues higher and the bearish divergence gets canceled out by a higher RSI. But according to what we see right now in the charts, which tell the facts, there's a huge correction coming for the dollar, which means that we'll most likely enter a new bull run either by mid-2023 or 2024. Again, this isn't a price prediction or anything. I'm just trying to say right now it might be a really, really good time to build position, accumulate. If you need the money, don't invest it. Make sure you always have an emergency fund and don't invest money that you need in the next 3 to 6 months. I'm just excited for the day that Bitcoin breaks out of this resistance line on the RSI, breaks up, support, just trends higher. You can see that we had a resistance, support, resistance one more time. Maybe support, bounce, go higher. I know summer of 2023 sounds like a long way, but it gives you time to build position. It's already October. We're going to be entering into November very soon. The holidays, Christmas, New Year's, going to go by real quick. And next thing you know, 6 months later, we're already going to be halfway through 2023. Bitcoin should, according to this analysis, be at the 30 to 40K mark. And the next Bitcoin halving happens in 2024, which is going to be a huge catalyst for the next bull run. Well, with that said, I hope you all enjoyed this video. If you did, please give it a big thumbs up. If you have any questions or comments, leave it down below. Consider checking out the Patreon group, link down below as well, where I share how I'm navigating through these markets. But other than that, stay safe, invest wisely, and I'll see you guys in the next video over. Good night, good morning, adios.